Hello, very good afternoon, everyone. So, we are back again in this series of Finance and Economy Editorial Analysis. I hope I am audible to you all. Let me know, please. Anyone? Am I audible and visible as well? Okay. So, in today's session, out of those newspapers, which are Economic Times, Business Standard, Business Line, and Mint, there was no such economy or finance related article. So, today I have picked up the editorial which is there in the Indian Express. Okay. So, the editorial has been selected from Indian Express, and it is a very interesting topic and the only economy related editorial which is there among the newspapers. So, it is related to GST today. Okay. Very good afternoon. Please let me know, am I clearly audible? Anyone please, yes or no? Yes? Okay, very good. All right. So, as you can see, as I have told you, so today's your article is from Indian Express. I got two suggestions in the comment box. The one was to pick up some editorials from the Indian Express as well. So today this article is from Indian Express only, okay? Because there was no other article in other newspapers. Also, someone was saying to include the entire screenshot of the news or the editorial so that you can read. But you know what? It becomes difficult to make the font clearly visible in the screenshot. So, although I tried to include the entire screenshot, but it might not be visible to you to read from here, right? So, in that case, you can go to the newspaper Indian Express and read this editorial on the edit page. All right. So, let's start with this analysis. It would be very interesting and you would be very clear about GST today. All right. So, interested about this? Let's start. So, the title here is Ease the GST Compliance. As you can see here, in the editorial as well, the title is Ease the GST Compliance. Okay, Ease the GST Compliance. So basically here, the author has talked about, there are co-authors basically. So they have talked about the GST's compliance process, that there are certain glitches in the compliance process which need to be addressed by the GST Council. So we'll look into everything. What is GST? What are the problems highlighted? Okay, and how can it be resolved? All right, so let's start. Okay, what are the glitches first of all? So as highlighted in the article that there are certain problems. What are the problems out there? So the authors have said that in last month, these are certain features first which we are highlighting. We'll look into the problem as well. In the last month of GST collection, the GST collection crossed a mark of 2 lakh crores, which is highest ever. Remember one thing, this is an area which attracts a lot of questions in your examination. So you should remember that if any question related to taxation, like which all the taxes are the prominent sources or top 3 sources of revenue, tax revenue collection for the government. So what would be your answer? Any answers please? Do you know which all the taxes are among the top 3 or they are always in the rank 1, 2, 3, either of them, okay, in giving revenue, generating revenue to the government of India? One of them is GST, other one is, yes, one is GST, but the other one is income tax, right? So you have GST, you have income tax, and the other one is, okay, third is very interesting. I would appreciate if you know that. It is corporate profit tax, all right, CPT, corporate profit tax. So one is your income tax, then is your GST, and then is your CPT, corporate profit tax. They are always in the list of first, second, third, which rank changes. What is CPT? Corporate profit tax is basically that the tax levied on the profits of the corporations or corporates. Simple, okay. So CPT is also one of the largest tax revenue contributor to Government of India. So the news is that GST collection last month has crossed 2 lakh crore mark, which is a huge number, right? It has created history. But this collection only and being happy on the part of rising collections is not sufficient for India. We need to improve upon certain glitches which are there. Okay, so increasing collections are not sufficient. There are certain glitches which need to be addressed. This issue has been raised by the co-authors of this editorial. Now, what are these glitches which the authors have talked about? So, one of the important thing which has been highlighted in the entire editorial is time limit in claiming the ITC. Time limit in claiming the ITC. Okay, so this is basically the theme of the entire editorial. If you read it, you will be able to understand. Now, what is ITC, input tax credit? What is the time limit? How is it posing a problem to the producers or MSMEs? I'll explain it to you all. Okay, yes, around 2 lakh crores. Let's start. The aim of GST was to eliminate the cascading effect of levying twice tax. Now the story starts. Okay, be very attentive and just link all these steps which I am explaining to you. Okay, then you will be able to understand the story. So here the main problem highlighted is of ITC, input tax credit. It is something related to ITC. ITC is a very integral and very important feature of the entire GST, goods and services tax. So let's first understand what is GST, what is ITC, what are the features. Okay, then we'll understand this problem highlighted in the editorial, and we'll also dig into this statement that why do we say that the aim of GST was to eliminate the cascading effect of levying twice tax. It is related to ITC only. All right. First, let me know, do you know what is GST? Are you aware of GST? You might be aware of GST, but in detail or not? You must be aware of GST, right? Okay, so even if you are not, let me explain it to you. Okay, so what is GST? GST is basically, as you all know, is an indirect taxation reform in India. Yes, we would call it a reform. It has subsumed n number of indirect taxes of central government as well and of the state government as well, right? So full form, as you all know, goods and services tax. So first thing, it is an indirect tax. It is an indirect tax, isn't it? What is indirect tax? I have told you the definition or the difference between direct tax and indirect tax. How do you differentiate direct tax with an indirect tax? Indirect tax levied on consumers. Okay, yes, we'll be dealing with this intricacies, that is it directly charged from the consumer, where is it imposed, everything would be clear by the end of this session. Okay, so a very important topic will be prepared out of this editorial. Okay, so what is an indirect tax? Let me explain again it to you. Always remember this basic classification. So whichever tax is given to you, you will be able to classify it either in the indirect tax or in the direct tax, whatever the question is. So direct tax, basically the basis of differentiation is the tax burden. On whom does the burden lie? Burden means who is liable to pay the tax. Are you getting my point? So when I say that it is a direct tax, it means that the burden of paying the tax lies on the same person on which the tax is levied. Is that clear? For example, you have the income tax, the corporate profit tax. CPT is also a direct tax. Okay, levied on the corporation. Corporation only has to pay it. Another one is indirect tax. What is an indirect tax? Indirect tax is such tax which is levied on someone else, but that person can shift the burden of paying that tax onto someone else. Are you getting this? Yes or no? So in indirect tax, the tax burden gets shifted from one person to the another or to the end consumer, right from the producer. Is that difference clear? Okay, so GST first of all is an indirect tax. So as you can see, the burden of GST can be shifted from producer to the consumer, which means that we buy something from the market, whatever you purchase, say a biscuit packet, okay, packet of a biscuit, say Parle-G or anything else, you have MRP written over it. That MRP already includes the taxes paid by the producer of that biscuit. Okay, now you are paying the MRP, the burden of that taxation has been shifted to you because the producer paid the tax, he is making you pay the tax. Is that clear? So this is the difference between direct tax and indirect tax. So remember, GST is an indirect tax. And what does it mean? This is how we explain an indirect tax. Now, salient features, that it is a destination based taxation system. Very important. Destination based tax. Always remember that this has been a reform. GST has been a reform in India. Why do we call it a reform? Why isn't it only an act or only a new taxation regime? It is a reform. Sorry, it is a reform because this system has replaced the earlier one. Which one? We earlier had, before the GST or before the VAT system which introduced in India, we had output based system. Output based system. Output based system. So basically, GST is a kind of VAT only, value added tax. GST is a kind of VAT, value added tax. Before value added taxation in India, the taxation regime which we had was known as there is some noise in the back. Okay, let me fix it. All right. Is it okay now? No noise from the background? Tell me, is it fixed or is it still coming? No means what? No noise, right? Not fixed or no noise. Please, it is coming. Okay. Not fixed yet. Okay, just wait. Is it fine now? Fixed? Yes or no? Yes, anyone? Is it okay now? No. Yes. Someone is saying yes, someone is saying no. Is it disturbing you a lot or you can adjust with it? Some are saying yes, some are saying not fixed. What to do now? It's okay. Okay. All right. Let me know if it is adjustable. Okay. Let me know if it is too much. All right. If you can adjust, that would be okay. If it increases, then you should let me know. All right. So let's begin again. All right. So we were discussing noise increased. Okay, let me fix it. Just wait for 1 minute. हेलो, अब आ रही है आवाज सही? Anyone let me know? Is the voice clear now? Hello. Yes, clear? Better? Okay, all right, done. All right then, let's move ahead. Okay, so we were discussing that one of the most important feature which you should remember is it is a destination based tax. Okay, destination based tax. Also before that, it is a VAT, value added tax. Now why are we calling it as a reform? Let me explain it to you. What happened in the output based taxation? So before VAT, so before VAT, we had output based system. Okay, output based system. Now in output based system, what happened is that the taxation was levied on the final price of the product, or it was levied at each and every stage. So you had to pay it twice or thrice sometimes. So it was a kind of double taxation or tax cascading. This is something which is called as tax cascading. How is it? Let me explain. Okay. So suppose, for example, you are producing, say, biscuit. You are producing biscuit. So in biscuit, you need some inputs. What kind of inputs are they? Suppose the inputs which you purchased were worth of 100 rupees. Okay, and you paid 10% tax on purchasing those inputs. Why? Because when you purchase, you already pay a tax, isn't it? Yes or no? When you purchase something, you pay the indirect tax. You cannot avoid the indirect taxes because they are not mentioned clearly, but they are under the MRP tag of the product. Okay, so you paid, say, 10 rupees tax on purchase of inputs for biscuit. What can be the input for a biscuit? Say wheat flour, butter, ghee, flavors, sugar, etc. Anything. Are you getting my point? So you paid 10 rupees as tax while you purchased the input for producing this product. Your product is biscuit. Now when you sell this product, say for 200 rupees, on selling this product as well, you are paying 10 rupees according to the tax regulations whichever are there. Okay, so we are not digging into those regulations, we are just trying to understand the process. So suppose you paid 10 rupees here only, 10% or say 10 rupees again. All right, so now the total tax paid by you is 20 rupees. Total tax paid by you is 20 rupees, isn't it? Tell me. But answer this one question, that the product which you made needs only to be taxed. Why are you paying taxation on the inputs which you purchased? This would disincentivize the producer, because when you are paying more tax on the input as well and again on the sale of the product, your cost of production is increasing. Yes or no? Are you getting this point? So if suppose in the new regime, now even if you pay 10 rupees on the inputs, that gets credited into your account, and the government says that you only have to pay on the value addition of something. Value addition is what? In the very first class we have discussed that production is nothing but the process of value addition. You add value to a certain raw material, then it becomes a product, isn't it? So when you add value, then only you have to pay tax of say 10 rupees here. Why would you pay tax on the purchase of the inputs? That is not value addition, that is input for production of your output. Are you getting this point? Let me know. What was output based system? Yes or no? Means in the final value. Yes. So basically in the output based system, as I told you, that when you purchased the input, you paid a tax of 10 rupees. When you sold your output, which is biscuit, you again paid a tax of 10 rupees according to whatever the tax laws are present for that product. Okay. So in total, you paid a tax of say rupees 20. but this 10% on input is extra. So you paid the twice which you were not, you paid the tax which you were not supposed to pay twice, right? So 10 on input and 10 on final product. This was on input which you were not supposed to pay in VAT system, because VAT is value added tax that you only pay for the value addition which you have done in the process of production. You don't need to pay on the purchase of inputs. That is your investment. Okay, that is your cost of production. Why would we charge you twice or thrice? So this is how it led to something or some problem in Indian taxation known as tax cascading. Known as tax cascading. Tax cascading. Tax cascading means tax on tax. Tax on tax, or say taxation twice or thrice. You unnecessarily paid tax. Okay. So in that case, you just needed to pay 10 rupee tax, not the input one. Got this? Now you will be able to understand. See, so as in output system, I explained it to you that the taxation on input was also there, not only on the final product, but then we shifted to a new regime which is known as VAT. Value added tax. Value added tax. By the definition, or by, as the name suggests, value added tax. Value added tax. Tax on value addition. Tax on value addition. And what is value addition? Value addition is production. So when you purchase inputs, that is not value addition. That is investment for your production. But when you sell your produce, you have added value to your raw material and then sold it. So your final product needs only to be taxed. This is the concept of value added tax. Is that clear? So if you need to know the formula, that would be the output minus intermediate consumption. Intermediate consumption. VAT formula would be final output minus intermediate consumption, which means, say suppose your output it is worth 600 rupees. Your output or the price of your final product is worth 600 rupees, and the intermediate consumption. Intermediate consumption means all the money which you have invested to purchase inputs for that product is say 300 rupees. Is say 300 rupees. So your value addition is only of how much? Tell me. Value addition is only of yes, quick answers please. So here your value addition is only worth rupees 300. Are you getting this point? It is only of 300. Okay. So your output is priced 600 because there is something called input prices which you include in the price of the output, right? So 300 is not your value addition. This is something not called as value which you have created. It was the price of your inputs you used. So value created is only 300. Are you getting my point? Now if there is a 10% taxation, 10% taxation on the product, then the tax you were paying as per the output regime, say 10% of 600. 10% of 600 is, tax would be how much? According to output regime, if it is taxed on 600, it would be 60. And if it is taxed on only value addition portion, then the taxation would be 10%. Again, same 10% say. So 10% of 300 would be, yes, let me know. Okay, very good. Got this point? This is the difference. Now, isn't it an incentive to the producers of India? Yes, earlier they were paying unnecessarily twice or thrice the tax. Getting this point? So this is the difference which GST has made. Now let's get back to the PPT. That's why when we say that GST is a type of VAT. And earlier in this PPT, this point, the aim of GST was to eliminate the cascading effect. Now you got this point? Cascading effect, unnecessary tax burden on the producer of levying twice taxes, which happened to be in the earlier output based taxation system. But as far as we shifted to the VAT, this problem got eliminated, and GST is a kind of VAT or addition to VAT taxation regime only. Clear? Let's move ahead. Now, it is a destination based tax, which means that it is levied in the state where the goods and services are consumed. So it is not levied where the goods and services are produced. Remember this one line for GST. It is a consumption based tax or it is a destination based tax. Always remember, whenever GST comes to your mind, this line should come to your mind. It is a destination based tax. Okay? Destination based taxation system. What does it mean? That the tax would be levied where the good is sold, not produced. For example, if the good is produced in, say, Gujarat, okay, good X is produced in Gujarat, but it is sent or consumed in, say, Maharashtra. It is consumed in Maharashtra. Where would GST be levied? Gujarat or Maharashtra? Gujarat or Maharashtra? Yes, quickly. Maharashtra. Very good. Because it is a destination based tax. The tax is collected where the produce or the good is consumed or it is sold, not where it is produced. Are you getting my point? So this is how the burden on the producer also gets reduced, and this is also promoting equality among these states. Can you tell me how? You can link it with this opinion as well, this dimension as well, that when you see if I ask you which are the top producer states of India, if you can quickly give their names to me, top producing states or the states which have built their economy on the basis of production. What would be your answer? The states from South India, right? Like Tamil Nadu, Karnataka, yes, Telangana. From North India, you have Gujarat, Maharashtra, Punjab, or some parts of Punjab, okay? Some parts of UP, the industrial part, right? But if I ask you which are the states which are lagging behind their GDP growth due to lack in, say, production, these might be your Bihar, parts of UP, right? Some of the northeast states, West Bengal, parts of Odisha, all these, this belt, okay? So what is there? There is economic inequality. There are certain states which are able to build their economy due to production. But what is there about those states which are heavy consumers, where population is more but production is not? So they lag behind in increasing their sources of earnings or sources of revenue. So are you able to link something with it? That if taxation is levied, say SGST is levied in Maharashtra, in that case, the government of Maharashtra will be able to earn resources or tax revenue. It would reduce the income inequality between producer states and non-producer states. Isn't it brilliant? Yes or no? Are you getting this point? Right? So this is, yes, wow. It is a wow, right? So it serves so many functions. This is very important, okay? Destination based taxation. This is what I explained to you. It is charged at every point of sale where you sell that product, okay? Destination. Then some important facts about GST which you should remember, that it was implemented by 101st Constitutional Amendment Act, and which article of the Indian Constitution deals with it? Article 246 Clause A. Article 246 Clause A, okay? It is calculated only in the value addition. Earlier only I explained it to you that why GST is a VAT, because if final value of the product is 600, the tax, say 10% is levied, tax to be paid is 60 rupees, but the value addition was only of 300 rupees. So tax should be levied on that value addition. Now it is 30 rupees, half of the tax burden. This is what GST is. Okay, so value addition पे ही ये लगता है. The final consumers will pay only his part of the tax and not the entire supply chain, which was the case earlier. As you can see now, that the final consumer has now to pay the tax on the value addition because the consumer is purchasing that biscuit. So he is paying for the biscuit only, not for the wheat, for the ghee, for the butter, for the sugar which was used in the production of that product. Are you able to get this point? Right? Because now 30 rupees on 300, which was value addition, not 60 rupees on 600, which was earlier in the, earlier means what? Earlier means early output regime, the regime which existed before the implementation of VATs in India. Is that clear? Moving ahead. Now, one more thing about GST, you have several types of GST. Okay, so as you all know, it is IGST, CGST, SGST or UTGST. So just briefing about them for your clear understanding about GST. So first thing, destination based tax. Other thing, types of GST. Integrated goods and services tax or IGST. First is IGST. Now see, because you have state governments, you have central governments, and movement of goods happens intrastate, that means within the state, and interstate as well, between two states or between one or more state. Does it reduce tax burden on consumer? Of course. That is what I explained to you. So say, picking up from that example, if the producer had to pay or the consumer had to pay 60 rupees because tax was levied on 600 without deducting the input prices, now the tax would be 30 rupees only. It is direct reduction in consumer tax burden on consumer. Okay, direct reduction. Now IGST. So first type of GST we have is IGST, which is also known as integrated GST. Okay, where is it imposed? So basically, integrated goods and services tax is a tax under the GST regime applied on the interstate movement of goods. So say, for example, if the good is going from Gujarat to say Punjab, okay, so there are two states involved. So when there is interstate movement of the good, the IGST will be levied. Are you getting my point? So IGST means integrated. Here the share will be of states as well as of the center. But I'll explain, just wait and watch. So from Gujarat, it is going to Punjab. So two states involved, IGST will be imposed. Two states. Supply of goods, services as well as on imports and exports. Yes, remember. On imports and exports, we have IGST. But one thing which you should note here is that exports in India are zero rated under GST, which means if you are paying tax or GST on exports, you can reclaim it. Are you getting this point? You can reclaim it. Exports under GST in India are zero rated. Remember this. Exports under GST in India are zero rated. Zero rated means no GST on exports in India. No GST on exports in India. Why? Because we do not want to disincentivize the exporter. Now the question which should be arising in your mind, that you said IGST is imposed on both imports and exports. Yes. If you are paying it on export, you can reclaim it when you file your GST return. Are you getting my point? That would be given back to you. Is that clear? So you need not pay GST on exports, but on imports. And on imports, because it is happening between two countries, IGST will be imposed. Is this much clear to you all? So as you can see here, imports and exports. IGST is governed by GST Act. So every type of GST, if it is IGST, there would be IGST Act. If it is SGST, SGST Act. If it is CGST, CGST Act. Okay, no confusion. Now, who levies this tax? The responsibility of collecting IGST is with the central government. IGST is collected by the central government, but the proceeds of this tax, the money earned or the tax receipts earned through this tax is distributed between states and the center. After the collection, it is further divided among the respective states by the central government, the states involved in that transaction. So these are imposed on interstate transactions. So all these states which are involved in that transaction will be provided with the share of this collection, although it would be collected by the center. Is this clear? Okay. Moving ahead. Then we have SGST, simply State Goods and Services Tax. So SGST would be levied on the intrastate transaction. Means that if something is produced, say in Gujarat, and it is sold in Gujarat only, right? It might happen as well. It should not be, it is not the case that if one state has produced, the other only will consume. No, same state can consume as well, right? So Gujarat has produced and Gujarat has consumed. So intrastate transaction within the state, separately the GSTs will be levied. SGST, the state government, which is here Gujarat government, will levy this tax, and the revenue generated from this tax will be under the state government or the government of Gujarat only. Is that clear? So applicable on intrastate, that is within the same state, and both SGST and CGST are levied here. I would explain it, but the revenue earned through the SGST is solely claimed by the respective state government. Here, Gujarat government will impose SGST, that would be revenue of the Gujarat government only, no share with anyone else. And similarly, on intrastate transaction of any good, CGST is also imposed, and that CGST would be retained only by the central government, Central Goods and Services Tax. Okay, so here no sharing of the taxes, but in IGST taxes are shared. Alright, so this is your CGST, Central Goods and Services. Just like SGST, it is imposed on intrastate again, okay, intrastate, and here CGST collected is by the government and revenue earned will be kept by the central government only. No sharing with the state, and state also didn't share with the center or any other state. Right? Is that clear? Similarly, when we talk about SGST, you all know that in, apart from states, we have certain union territories. So in union territories, we have UTGST, and UTGST will will also be imposed in UTs. So there SGST will not be imposed. In UTs, UTGST will be imposed. But there is a note here which is useful, which can be asked, that UTGST will be levied in addition to CGST, which means that be it union territory, you will impose UTGST, but that would not prevent the central government from imposing their GST. So CGST will also be imposed, and UTGST will also be imposed in intrastate trade within a union territory. Are these classifications clear to you all? Simple, the name only is suggesting you the answers, right? This was just for your understanding, and now you will be able to relate everything, okay? One thing is still left, let me explain, and we will be moving to GST Council later. First, let me explain you. The issue which has been highlighted in today's editorial is ITC, Input Tax Credit. What is ITC? ITC. Input tax credit. Input tax credit. As I have explained to you that there are certain features of GST which are very important. One among them is ITC, Input Tax Credit. Okay, what is it? So as in the VAT system, we have seen that, picking up the same example, suppose the product price of your product is rupees 600, but your intermediate consumption was rupees 300. So your input prices which you used in the production process were, say, of rupees 300. So actually the value addition was only for rupees 300. Output minus intermediate consumption, formula of calculating VAT. Output 600 minus intermediate consumption 300. Value addition is only of 300, right? So here what happens is, even if you pay, so this is not like, you don't have to pay the tax. You pay the, say, 60 rupees, but actually you had to pay 30 rupees. So there is a difference of 30 rupees which you can claim. They will be, that amount 30 rupees would be credited into your account. This is the feature of GST. The taxation or the taxes which you paid on inputs during the production process, the GST which you paid on your inputs will be credited to you. This is known as input tax credit. Clearly understandable from the name only, input tax credit, credit of your input tax. Is that clear? So in this system, since you paid 30 rupees extra because of your inputs, that would be credited into your account. So it is input tax credit. Now you actually only paid 30 rupees which you were supposed to pay under the VAT system. First tell me, is this clear to you all? What is ITC, input tax credit? So every GST which you pay on your inputs which have been used in the entire process of production gets credited back to you, and this is known as ITC, input tax credit. Is this clear? Yes. Now your question is, how is GST good for consumers? See, it has reduced burden on them. It has reduced burden on them. Earlier, the producer had to pay double taxes, so consumer had also to pay double taxes, isn't it? Now, moreover, now the tax rates are clearly available in the consumer's mind as well. Okay, so consumer is aware about the tax slabs. You cannot do adulterations with it. Okay, so you cannot befool the consumer, for which you have something called as there is an agency, a council established by the GST Council, National Anti-Profiteering Authority, yes, NAA, National Anti-Profiteering Authority, to check whether the reduction in the tax rates are passed on to the consumers or not. Say for example, if government has reduced tax on a product from say 12% to 5%, GST from 12% to 5%, but the producer is charging or the retailer is charging the same price, that would amount to punishable offence. Okay, for this an agency has been established known as National Anti-Profiteering Authority. You cannot get your profits out of this. Is that clear now? Your answer is answered? Question is answered? Right? Okay. So this is what ITC is, input tax credit. Now let's see. Okay. Now, what was the problem which is highlighted in the editorial? So, on the very first slide, I told you that there is some issue with the ITC, input tax credit. Are you getting my point? What is the issue? This is what has been there in the editorial. So, they are saying that, for example, there is a manufacturer, okay? There is a manufacturer or producer who has to pay a monthly tax of rupees 1 lakh. Monthly tax liability on that person is 1 lakh related to GST only. Now, in making of the product, he used inputs. Everyone uses inputs. So, the product, whichever product he made, he used inputs on which he paid GST of 60,000 rupees. On which he paid GST of 60,000 rupees. This amount can be claimed as ITC. So, now you tell me very quickly, since I explained what is ITC to you, how much amount of ITC will be claimed in this case? 1 lakh is total tax liability, okay, but 60,000 were paid as GST on the inputs already. How much ITC will be claimed in this case? Tell me very fast. How much ITC will be claimed in this case? 60,000. 60,000 was okay, 60,000 was paid on inputs, yes. So, this amount can be claimed as ITC. 60,000, very good. So, now what is the tax liability remaining? How much does the producer has to pay now? Only 40,000, because the entire liability was 1 lakh, okay. So, this is ITC. Are you clear about ITC now? GST paid on inputs get credited into your account. You need not pay any GST on your inputs. You only have to pay GST on the value addition which you have done to your inputs. Clear? So now after taking credit of this amount, so this will be credited back 60,000. After taking credit of this amount, the producer has to pay only 40,000. Okay, this much only while filing his monthly return, monthly GST filing, which is known as GSTR 3B. Just for your information, GSTR 3B. It is a self-declaration summary GST return which is filed every month. So basically GST return filed every month. Now, but what happens is, this is the story. The problem is there are many clients of that producer who have not paid the money back to the producer. Okay, so his clients did not pay his dues, so he falls short of funds and he only has 10,000. He has to pay 40,000 now, but there are certain clients who took money from him or say purchased the good but have not paid the bills yet, so he only has 10,000. He doesn't has that 30,000 extra with him. Okay, are you getting my point? So there will be an overdue of rupees 30,000 in that month. Suppose you are this producer, 40,000 is the tax liability on you after deducting the ITC, okay, but you are unable to pay this 40,000 GST. Why? You don't have this money. Why do you don't have this money? Some of your clients have not paid your bills. You have sold your product to them, but they haven't paid the bill yet. So you only have 10,000 available with you. So 30,000 is overdue. 30,000 is overview. Is this clear until this point? Now the actual analysis is starting. That's why I'm asking. Are you clear up to this point? Okay. Now what is the problem? Problem is that GST portal will not accept this return till the entire tax liability is not paid. So you only have 10,000, your clients haven't paid your bills, you are unable to pay the 40,000. But GST portal is designed in such a way, so the mechanism is this, that this will accept your return, monthly GST return, only if you pay this entire overdue amount, which is 40,000. Actually, your due payment was 40,000, you only have 10,000, you have a shortage of 30,000. But 10,000 will not be acceptable as GST return according to the mechanism which is there under the GST. Is it clear? Right? So GST portal, this is the problem highlighted. GST portal will not accept this return till the entire obligation is paid. No monthly return can be filed if the previous one is not cleared. So here the problem is highlighted. You cannot pay it in partial amounts, okay, and you cannot pay your next month's return if you have not cleared your earlier one return, your previous month's return, GST return or GST 3B, GSTR 3B. Is this clear? How is it a problem? Let's see. Now, what happens is that the situation does not end here. Moreover, the time limit available to avail the ITC is 30th November each year. Now you think that you are the producer. You had to pay this 40,000 in the month, say before November, 30th November, or say in October, okay. The time limit available for you to avail that ITC, which was 60,000 in this example, is only by 30th November each year. Yes, this is the time limit available at present, okay. So you can claim all your ITCs through your GST returns when you file your monthly GST returns only by 30th November of each year. Is that clear? But since you were not paid by your clients or by the governments to whom you sold your products, you did not have the sufficient amount to file your GST, which was the entire overdue amount. So you cannot claim the ITC now. You will not be able to claim the ITC before 30th November, and if you do not claim it before 30th November, it will not get credited to your account after that time. Are you getting my point? So here is the loss to the producer, and there are thousands of producers like this in the Indian economy. It is the loss to the producer, isn't it? Loss of 60,000 directly. Yes or no? There is a provision in the act which is for the benefit of the producers in India and to incentivize them to produce more so that production can increase. If this kind of system works, there will be losses to thousands or lakhs of producers in India. Are you getting my point? Now, why is this issue? This is an issue because it happens with thousands of MSMEs in India. And MSME is a priority sector for the government of India right now, as you know. Right? MSME. Micro, small and medium enterprises. Micro, small and medium enterprises. Why MSMEs? So, if you do not change this compliance system, if you do not change this deadline of availing ITC till 30th November of each year only, many of the MSMEs will run into losses. They will not be able to claim their ITC. Are you getting my point? Tell me so that I can proceed further. Yes or no? Yes? Okay. Right? So now it is a huge concern for Indian economy because you know MSMEs are our priorities and they are micro, small and medium because their turnover, their investment is lesser than the bigger firms or industries. Right? And you know that government is trying to protect MSMEs as much as they can and to provide them credit facilities, for example, loan facilities, right? They are trying everything which can happen to develop the MSME sector in India, right? For that you have the MSME Act as well, 2006. Micro, Small and Medium Enterprises Act of 2006. So this situation is a loss to thousands of MSMEs as they do not receive their payments despite the time limit of 45 days imposed under the MSME Act. Now again, what is the issue? That according to the MSME Act 2006, whether whatever your industry is, micro, small or medium, any out of these, okay, micro, small or medium enterprise, whichever your enterprise is, whatever your sale is, either you are selling your product to the government of India, government of any state or any private client, the payment which they should pay to you has a time limit, that is 45 days. They should settle your payment within 45 days. Are you getting this point? Why is this provision provided by the government? So that they can provide working capital to the MSMEs. You all know that MSMEs are already lagging behind in the production competition or in the market, right? In the race of this competition. They do not have the enough capital. That's why they are micro, small and medium in their sizes. Are you getting this? So they don't have capital. If you don't pay their bills on time, their working capital will get reduced. So in order to provide them with sufficient funds, the Act of 2006, MSME Act, provides for 45 days limit for settling your payments with MSME. Are you getting this? Right? Despite this, many of the MSMEs in India are not getting their bills paid within this time limit of 45 days. Okay? Despite the time limit of this 45 days, sometimes government is not paying them within this time limit, their clients are not paying them, so they don't have the funds. Now if they don't have the funds, they will not be able to file the monthly GSTR, yes or no? GSTR, monthly return. If they do not file the monthly GSTR and if there is an overdue, the next GSTR cannot be filed. And if they do not file the GSTR, they will not be able to pay to claim the ITC before 30th November of each year if the amount gets outstanding every month. Now are you able to relate the entire story? Suppose that manufacturer is no one but the MSME. So 60,000 lost directly to the MSME sector, MSME firm, okay? So supplies made to the government often remain unpaid.
the supplies which MSME make to the government remains unpaid sometimes. Sometimes clients do not pay them, right? So this is why you need to change this mechanism, this time limit of 30th November, so as so the MSMEs and other producers in India can get benefit out of this provision of GST, and it does not harm them. One more thing, so here GST Council is suggested to do something in this regard. So we have two things to discuss now, what is MSME and what is GST Council. MSME, as you all know, is medium, micro, small and medium enterprises, right? Micro, small and medium enterprises. As per the latest classification which is done in 2020 by the government, earlier the basis of classifying these three was only investment. See, previous criteria was on investment basis only, but now turnover has also been used. So micro enterprise is any enterprise for which the investment in the plant and machinery of that firm, plant, machinery, equipments, is less than 1 crore. Okay, you can remember these facts. Very important, they can be asked. Turnover should be less than 5 crore for micro enterprise. So investment less than 1 crore, turnover less than 5 crore for micro enterprise. That would be known as micro firm. Then small enterprise, investment less than 10 crores and turnover less than 50 crores. Clear? Then medium enterprise, such enterprise for which the investment in plant and machinery is less than 50 crore and the turnover is less than 250 crore. So this is the latest classification as per 2020 notification by the government. Okay. This is how you classify all the MSMEs. One thing we need to discuss is what is GST Council then. So GST Council is a constitutional body, remember, because for this the provision has been inserted in the constitution through the amendment, right? So article 279A of Indian Constitution talks about GST Council. It is the council which takes all the decisions regarding GST, be it GST rates, which product to be included in GST, which is to be kept outside GST. All these decisions are taken by GST Council. Remember this article and GST Council. So it is a joint forum. Here you have the union minister as well as the central as well as the state ministers as well. You have ministers related to taxation or finance from each state. So states are very well represented in this council. Okay. Chairperson is your finance minister, union finance minister. Other member is union finance minister of state. Okay. And then all the ministers in charge of finance or taxation from every state or union territory. So this is a very widely representative body. Okay. So it basically decides everything. So author says that the GST Council must do something in this regard. Otherwise, this provision of ITC will not benefit the producers, and the GST, rather than impacting India positively, can have a negative impact on the economy. Because this is how, given the time limit of 30th November, given the limit that if you do not clear your previous dues, will not accept further GST returns. Given all these situations regarding ITC in GST, there is a loss which is being incurred by the producers. Okay, or by the MSME sector in particular, and we are very concerned with the MSME sector at present. Is that clear to you all? So that was the theme of this editorial, that you should ease these compliance norms of GST. Okay, which compliance we were talking about? The compliance with the ITC, input tax credit. Now tell me, are you able to relate all these things with the GST which are provided in this editorial and the ITC connection with all these things, right? Why is this a big concern for Indian economy? Just let me know, yes or no, very quickly. And you must be very clear about certain concepts of GST as well now, okay? So this editorial has given you an insight into the problem as well as the entire concept of GST. I hope this was useful for you, and this was for today's editorial analysis. I'll meet you in the next session, taking up some new interesting editorials which are there in the newspapers. and then we'll try to understand everything, okay, and try to approach it in the manner of interdisciplinary approach and also multidisciplinary disciplinary approach, integrating everything and then interlinking it with the main theme of the editorial, right? That was it for today. I hope you a very good day. Thank you. I'll see you tomorrow in the next session. Thank you so much.